Hello, everyone. Hopefully you can all hear us and see Matt and Curtis on the screen. We're really pleased that you could join us today. This is Erica. I'm great. Thanks for letting us know you can hear us. This is Erica. I'm the Director of Marketing with True North Accounting, and we're so pleased you could join us today. We're going to be joined today with Matt and Curtis. Most of you probably know if you are clients of True North. We know this has been really a very stressful time for everyone, so hoping today that we can alleviate some confusion around the Canada Emergency Wage Subsidy, as well as the Canada Emergency Commercial Rent Subsidy programs. So we're going to spend the first half of the webinar kind of talking through those initiatives, and this is all based on the most current information we have. As you know, things are changing quickly, so we're doing our best to keep ahead of that and break this down for you. The second half of the webinar will be dedicated to answering questions from all of you. So with that in mind, if you can please use the Ask a Question function to submit a question that you'd like Matt or Curtis to answer in the second half of the webinar. It's just at the bottom of the screen. It's marked Ask a Question. We also have a poll going on there around topics for any future webinars. So please feel free to vote there if there are some topics that you'd like us to do a future webinar on. You can upvote others' questions, and if you're interested in hearing the answers to those, so take a look at what's been submitted before you submit your question, and we will focus on the most popular questions during our Q&A. If you have any issues with audio or video or want to comment, please use the chat function for that. Our colleague Lisa will be moderating that chat function, so if you have any issues with your audio or video or anything like that, Lisa will chat with you there. I just want to caveat a couple of quick things. We just ask that you keep your questions focused on understanding the programs rather than critiquing them or the governments that have announced them. And also a caveat that the information provided today is based on Matt and Curtis's expertise as CPAs, but we are not representatives of the government or of these programs. So before we get into the goods, just a quick little intro about True North Accounting. We are an Alberta accounting firm with locations in Okotoks and Calgary. We offer bookkeeping, accounting, and tax services for incorporated small businesses, solopreneurs, freelancers, consultants, etc. We are passionate about supporting small business, and we're here to help guide owners on their small business journey. Before they jump into it, I'm just quickly going to introduce Matt. He's a partner at True North Accounting. He earned his Chartered Professional Accountant designation while working at PricewaterhouseCoopers from 2009 to 2014. He's the founder of True North Accounting and is passionate about guiding small business owners through the wilderness of running a business. Curtis Gabinet is also a partner at True North Accounting. He grew up on Vancouver Island and moved to Alberta in 2011. He's also a CPA and leads the client engagement practice for True North. Curtis will fight the CRA for you. He'll stay up all night on your deadlines. In fact, he probably is this week with it being and genuinely cares about the success of your business. Over to you, fellas.
All right, thanks, Erica. Everybody, thanks for coming, and we'll try to keep this fairly straightforward. We already did one webinar which went through like the CERB program right when they were initially announced. So this one is going to be really focused on the Canada Wage Subsidy, and then we'll touch on the $40,000 loan, which is called CEBA, or the Canada Emergency Business Account, and the Commercial Rent Assistance Program, which we don't know a lot about, but we'll break it down. So Curtis is going to start us off with the wage subsidy.
Yeah, so Canada Emergency Wage Subsidy. We'll talk about what it is, who's eligible, what's eligible, kind of how to calculate it before, a lot of the details, and then Matt will walk you through an example kind of how it works, because it is confusing. Like any CRA program or chunk of their website, you guys, if you've been on there, you know it's not the easiest thing to walk through. But if you do the calculations, take it slow, and try and understand what they're asking, you can make your way through it. So basically, it's up to 75% of the wages that are paid to employees can be reimbursed to your company, to you as an employer. So caps out at $3,388 per month per employee, and it affects that period there of March 15th to June 6th. 100, they announced afterwards that just recently 100% of the employer's portion of the CPP and EI that are paid to employees is eligible to be refunded as well. So when you look at the maximum reimbursed to each employee, $10,922 per employee over the 12 weeks. Employer is expected to pay the remaining amount of the wage. Obviously, the whole purpose is to keep people employed, keep them with like money in their pocket so they can carry on like normal. I saw one of the questions right off the bat will be answered here. So all of the subsidy received is going to be taxable income to the employer, to the company. So any amounts received are going to be treated as any other form of income, just taxable income, and you do pay tax on it. Oh, there. Was I not on screen before?
I think the camera shut off
Oh.
for some reason. Can you guys still see the screen share? Can you still see the slides?
Hey, they can see me now.
Okay, perfect. Okay, next slide.
So, determining who is eligible. The right side of the screen caption there is taken from CRA's website. So that's showing the periods that the wages paid to employees are taken into effect, and then where you're looking at your baseline revenue and the required reduction in revenue to the company. So pretty much any small business that has a payroll account is going to be eligible. Whether it's not-for-profit, a small business, even a sole proprietor, anything besides public companies, municipalities, pretty much any small business is going to be eligible for this. So business structure, well, covered that one already, but so business has experienced an eligible revenue reduction. So you've got to be able to support the fact that you do have a reduction in your revenue, and there's a bunch of different ways to calculate this. More often than not, you're gonna be able to do a calculation based on how you normally operate and come out with a percentage of drop in your revenue. So step one, you've got to figure out your revenue for March, and they say CRA gives guidance that you have to use your normal accounting method when calculating the revenue. So they say you can use a cash method or an accrual method. So however you normally book your revenue, whether it's when the dollars come into your bank account or when you generate invoices, you're supposed to use the same method to continue recording your revenue through March, April, May, and use that to determine if it's dropped. Then step two, you got to figure out your baseline. So baseline revenue to compare March 2020 against. And so that can be March of the prior year of 19, or you can take an average of January and February of 2020 combined. And then you've got your March revenue from 2020, and you've got your baseline amount. And then step three, you're going to calculate the reduction. So how much would just the percentage drop in revenue for March 2020 compared to one of those two baseline methods. If it was 15% or less, 15% or more for March, then you're going to automatically qualify. For April and May, it's a 30% decrease. But if you qualify for any period, you are automatically eligible for the following periods. I think, Matt, are you going to walk through the?
Yeah, so this is a real life example. It's a Calgary-based corporation. It's husband, wife, owned and operated. Joanne, the wife, is on payroll. John, the husband, takes dividends, and they have no other employees. So it's a fairly simple example, just to give you guys the idea. And we'll walk through. We have a template that's posted on our. It's in the email we sent out. And I can send you a link to it after this, but it kind of walks you through the most simple way how to calculate your revenue drop. So this client gave us their drop in revenue. They were almost 15,000 in March last year, and they're down to 3,500 this year. So in the template that we have, all we have to do is in these, like, you just fill out the blue boxes. So revenue March 2020 would be the 3472. March 2019 is the 14,896. And there's just a few extra cells here because if your business started after March 1st, 2019, you can use, or you would use the January and February, the average of those 2 months as a comparison. Or if you were in a high growth mode over the last year, you can elect to use January and February as the comparison. This is a long history of earnings. So we just took the March 2019 for simplicity, but you can see their decrease in revenue was 77%, which is greater than 15%, and they are eligible. And because they are eligible for period 1, they automatically qualify for period 2. Okay, so that's step 1. That's like, you don't have to, if you don't qualify, or if you're not eligible after this first step, then there's no reason to like go on at this point. You can run it again for April versus like April 2020 versus April 2019, or January, February if you elect that. So yeah, we know that they're eligible. So it's time to calculate how much the government is going to get them. Because it is, in this example, they're owner operated. So it's husband and wife and their shareholders. They are what's referred to as non-arm's length, which means they can decide how much to put themselves on payroll for. And what a lot of business owners would do is like, okay, they pay themselves, what, 50 grand a year, but because the government's going to subsidize it, they'll jack that up to get the maximum. So that's one scenario that the government's trying to prevent. And then the other is if you do have an arm's length employee, so you're not related to them, you have no like bias towards how much they get paid. So we need to calculate the base period. That's January 1 to March 15th. What were they getting paid before all this happened? And that's their baseline wage. And for a lot of businesses that have slowed down since March 15th, they might have kept people on payroll but reduced their wages. So you can actually calculate the wage subsidy based on their pre-COVID wages. So if they were making $5 grand a month and then COVID happened and you cut them down to $2 grand a month, you could still get a subsidy for the based on the $5 grand a month. So that's a good qualification that they've allowed for that. So arm's length and non-arm's length employees, you just need to figure out if the employees you're calculating the subsidy for, which category they fall into. Okay, so that January 1 to March 15th, that's called your baseline wages. So you need that number, and then you also need the actual wages paid in the March 15th to April 11th period, which is the actual like period 1. So you need to determine that, as well as the CPP and EI. If you did reduce your payroll remittances for the April 15th payroll remittance deadline, you need to know that amount because that will reduce your subsidy for the first period. Yeah, so here's just a snapshot of the template that we linked here in the chat, and it's in the email we sent out. So John Smith, that's the owner, and this is actually Joanne, but okay, so John, he made $5,300 in January and February 2020. You can see that in those cells. He does not deal at arm's length. And then in March, his gross revenue went down to $49.79, including CPP of $261. So he's connected to the corporation, so he claimed that he's exempt from EI, which many owner-operators are. So we see his baseline revenue is good. It's it's over the maximum, which is $45.17 a month. That's kind of the maximum that the government will reimburse, or the maximum wage. That equates to $58,000 a year. So if you pay yourself $100,000 a year, they're still only going to reimburse 75% of the $45.17. So basically, you just put in your payroll amount in those blue squares at the top. You don't have to touch anything that's not blue. And there's just 3 lines at the top there, just based on the period that you're applying for. So the spreadsheet does the rest of the calculation. So just based on those numbers that you plugged in, he's going to get a wage subsidy of 75% of the $45.17, which is the maximum. So it's $33.88, which is if you break it down to a weekly wage, that's $8.47 a week. And the employer portion of the CPP is 100% refunded. So the total CEWS, which is Canada Emergency Wage Subsidy, is actually $36.25. $36.25 of $49.79. You can kind of do the math on that, but so that's how you calculate that. And then this is the summary at the top of this wage subsidy page. And these cells, like A, B, C, D, E, F, G, those line up exactly with the cells that the CRA wants you to enter in. So do this spreadsheet first before you actually open up the application and start working yourself through it. It's going to ask the number of eligible employees, the total wages paid, which is capped at whatever you're claiming, and then the total subsidy and the total CPP that they're reimbursing. So this is, once you submit the application, this is what shows up, and you can see it just lines up. Line A, number of eligible employees. Line B, total remuneration. It's just the same as this. So once you have that spreadsheet done, the application is super simple. The application is available through your CRA MyBusiness Account. If you've never registered for that, you can do that now. They have to send you an access code, so it might take some time. But the application is open till October, so you don't need to get on this right away. You have time to register for this account, wait for the code to come in the mail, which takes about a week, 10 days, and then you can get in there. So on this account, there's the GST account at the top, and then payroll. And the application is just that first line under payroll, Canada Emergency Wage Subsidy. So that's what you would click on, and it takes you here. Before you start, make sure you have all your numbers together is what it's saying, and you select the period covered by this claim. So there's 3 periods. The first period is March 15th to April 11th. And the periods are a little bit confusing the way they've done this, because it's like March versus March, but then the actual wages that you're claiming the subsidy for is March 15th to April 11th, and then April 12th to May 9th. So it's a little bit confusing, but just, for the first period, click March 15th to April 11th, click next. And this is where it pulls up the actual cells where you put the numbers in. So line A, number of employees. That's the first line on that summary worksheet. Line B, your total eligible remuneration. Did you rehire anybody? No, most people didn't. Calculate your emergency wage subsidy. So you calculate that and tell them how much you like to receive. So go down, fill in how much, like line D is how much EI did you pay on those wages. These guys are owner managed, so no EI. But there is $237 of CPP. So you put that in line E, and then these last two cells are, they would decrease your limit. So the first one is the government initially came out with a 10% wage subsidy. And the way that was administered was you just reduce your payroll remittances for 10% of your gross wages. So if you've done that, you've already claimed some of the credit that applies to this program as well. So you've already got some financial benefit from them. So this reduces anything in line F would reduce your claim. And then there's also another program for work sharing. And that usually applies for like those seasonal workers, like fishermen who work for 8 months of the year and then get laid off and collect EI for 4 months. If you're claiming anything under that program, that would also reduce your amount. So once you have all those cells filled in, click next. This is just a summary page. Again, line A, line B, all lines up to our template. So review that. Then there's this long attestation decree that you have to like you just click, I just certify and attest that I meet all these conditions. And basically, you notice they didn't ask what your revenues were in March, what your revenues were in March 2019. Like they're assuming you do qualify. They're not asking you for any of that info. So you're basically saying, yes, I've gone through everything and I do qualify and these numbers are right. And I'll be doing T4 slips for all these wages. And yeah, it's just saying that when they come back to audit you, you've done it right and you have all the backup. And then you just put in your name, phone number, and press submit. And yeah, that's basically the application. It's fairly simple. You'll get a confirmation page that looks like this. And if you have direct deposit set up, it'll be deposited within like a few business days. If they have to mail you a check, it'll take longer. Yeah, that is the CEWS application with the Excel template to help you through it. And I'll let Curtis talk to you about getting audited and some of the other.
Yeah, we know they're gonna, we don't really know what they're gonna do after the fact. We know they're gonna do some kind of auditing or reporting. We don't really know what it's gonna look like, but we're anticipating it's gonna be rolled out pretty heavily. They're gonna want to make sure that you've done it correctly and that they haven't paid you a subsidy that you don't actually qualify for or paid you too much. So it is important that you go through as painful as some of those application processes are and the calculation is, it's if you just go line by line and work your way through it, so you make sure that you are kind of audit proofing yourself when it comes to having to report on it after the fact. Yeah, it'll be important. So have detailed payroll records from January 1st all the way through to June 6th, because that's going to be the calculation of the baseline all the way through the subsidy. You want to make sure, same thing for the revenue. So how you calculated your revenue. If you're using the spreadsheet we've got or another form of calculator, just tracking it yourself, you just want to make sure that if you got asked by a CRA agent, you could just immediately provide them with the paperwork to kind of support your claim. And maybe, yeah, the method of how you determined it, as long as you can show that you use the same reporting method you've always done, you're gonna be safe there. And then, yeah, the reminder at the bottom, it is taxable. They're gonna give you money and then they're gonna tax you on it. So just make sure
it's taxable like to your business though as income. So it's not like 33%, unless you're a sole proprietor, I guess. But yeah, if for most corporations it'd be 11% tax rate. Okay, next page.
Yeah. So the commercial rent assistance program, there hasn't been too much news. They haven't really fully rolled this one out yet, but they do have some details out. It's going to apply to anybody, a small business that owns a commercial property and has a commercial tenant. Whereas you can defer or reduce their rent payments if they're having trouble. And so if you're not collecting rent, then the government is kind of putting this program in place to say, hey, we know that you're not collecting it, you're forgiving it, deferring it, we want to help you out. So under this program, the small business, like the tenant, will pay 25% of the current rent. The landlord's responsible for 25%, and then the government covers 50% of it. The landlord is going to apply for the loan to cover 50% of the rent, and if the landlord reduces the rent by 75%, so just the tenant only paying 25%, then the loan's forgiven.
And the landlord can choose to pay more than the 25%, and which would reduce the amount that the tenant would pay. Like, for example, like a hair salon or something, say they're totally shut down for business and they can't afford to pay any rent. The landlord can still qualify for this. They would just be footing half their costs or half the rent, and the government would cover the other. But as soon as the small business tenant, like the hair salon, as soon as they pay more than 25%, then that loan's no longer forgiven to the landlord. They have to pay that back. And it'll be on, we think the loan will be on similar terms as the CEBA loan, the $40,000 loan, where it's interest free until a certain date, and then 5% after that. So yeah, it's a good program it's really geared to incentivize landlords to give their restaurant, retail, hair salon client or tenants a break on their rent. Anything else on this one?
No. More will be coming soon, I'm sure.
Mm-hmm.
Do you want to touch on some of this stuff still then, or did you?
Well, okay, so say you're a landlord and you have a hair salon client, as long as they're paying less than $50,000 a month in rent, they would qualify. Well, I guess that's the first criteria. The second is that your tenant's revenue has dropped. Either they've ceased operations completely or their revenues declined by 70% or more. So, this is really for those businesses that are really struggling. Those along Main Street or Elizabeth Street in Okotoks or 17th Ave, or like I'm in Bridgeland right now and there like hardly anything's open. So yeah, there's a lot of these businesses that would qualify. On the landlord side, you would qualify if for some reason you have to have a mortgage on your property. I guess if you don't have a mortgage, then you're not as financially hard up if you're not getting rent. So yeah, the mortgage is one criteria. You can't evict that tenant during these months. And if you don't give them a break of 75%, you'll have to repay the loan. So those are the main criteria on that one. And we're pretty sure it'll be administered through the landlord's bank, much like the Canada Emergency Business Account, which is the next one. Yeah,
this program is interesting. It's really attractive. If you qualify and meet all the conditions, it's extremely attractive. A small business loan up to $40,000 to eligible small businesses, 0% until December 31st of 2022. And if it's repaid by that time, then there's going to be 25% of it just forgiven. So up to $10,000 completely forgiven. Whatever is not repaid is then going to convert to a term loan at 5% interest, 3-year term loan. the banks are administering this on behalf of the federal government, so it's backed by the government. They've announced some details on how many numbers of the numbers of loans that have already gone out. It's pretty staggering. So a couple of the stipulations, it looks like they are requiring, it has to be wages paid. You have to, part of the process, they're asking for total employment income that on the T4 summary. So the summary that accompanies your T4s out to all your employees has to be between 20,000 gross wages and 1.5 million. So it looks like there has to be some form of wages paid out to qualify right now. Who knows if they tweak it again in the future? It's hard to say. And the expenses covered by the loan have to be normal operating expenses that cannot be deferred. So that would be things like wages, rent, utilities, fuel for your vehicle, like normal, any normal operating expense you're incurring on a day-to-day basis. You can't take the loan out and throw it in a GIC and then earn interest and repay 30,000. You can't pay yourself a bonus with up 10,000 and just hang on to 30. You have to, again, we don't know what the reporting is going to look like after the fact, but we know they're going to ask for some form of support where you want to have some paper trail, something. What we've been telling people so far has been more along the lines of just have an Excel sheet or have something put together where you can actually show that out of this 40,000, I have used X, Y, and Z, and just a list of what you've paid with the funds. Just so it'd be really easy after the fact to support that you did use it for normal operating expenses and didn't just go gambling with it or whatever.
Yeah, if you really want to be cautious about it, we've heard of some people even opening just putting that 40,000 into a separate account, and then as you incur those invoices or pay those bills, you transfer the money from the one account, from your $40,000 account to your operating account, and then it's just dollar for dollar, pay my my graphic designer $1,258, then you would see a transfer of $1,258, and that would tie to the invoice that you're paying. That would be like audit proofing it. We'll see how much administrative capacity the government has when they're auditing these programs, but it sounds like they really want to scare people away from abusing the system. And another note is some people have two companies, both with payroll, both would qualify. Yeah, there's nothing in there that says you can't apply for both those businesses. Anything else to add on CEBA?
No, I've heard rumblings that there might be another one, potentially even higher, but who knows? It seems like, as we know, every day something new changes or something new gets announced. So stay glued to the news.
Okay,
Thanks, guys.
great.
All right, we're going to turn this over to question and answer. So make sure you have got your questions in, everyone, and please vote for any questions under the Ask a Question tab that you would like these guys to answer. We're going to go from the most popular down and answer as many as we can in the time we have remaining. So the first question there, Matt, I think you can probably see it, but asking about the wage subsidy and overtime, etc. I'll pass it back to you.
Yeah, so it's more than just the basic hours worked. It is anything that would fall on your typical taxable income. So overtime is fine. Vacation payout, if you're paying out 4 or 6% on each paycheck, that would include, or that would be included on that wage. Bonuses, commissions, those are all included in that wage for the subsidy. The only things that aren't allowed are taxable benefits, and specifically personal use of a company vehicle. And there was one other one.
Severance.
Severance is not included. But
very
few
few were excluded from it. So
Mm-hmm. Okay. Next question is about the CERB, which is the emergency relief benefit. I forget what it stands for now, but that's the $2,000 a month. And then the CEWS is the wage subsidy. So I read in the news that you can now have both. However, what happens if an employee makes less than $1,000 from an employer who is getting CEWS? Does that employee still qualify for CERB? Curtis, you want to handle this one?
Yeah. Initially, it looked like, well, Trudeau announced, he said you're not going to be eligible for both. You can't get both. However, initially they were saying that you could be eligible for CERB, the $2,000 monthly amount, and you could still earn $1,000. So when you look at that in total, like you step back and say, okay, well, I should be able to get $1,000 wage from my company and still qualify because I meet those two criteria. But now it looks like they're kind of changing it, and they're saying, no, you can't get both. So if you are collecting CERB, now it looks like that $1,000, say you're paying yourself just $1,000 a month from your own company to qualify for both, it looks like they're saying that won't be eligible for the wage subsidy now. But
no, yeah, it's definitely only one or the other. So if like CERB is like, if I'm an employee and I'm out of work, I apply for that personally. CEWS is my employer who's slowed down, let me go. So CEWS is the business, CERB is personal. And if we look back at the wage subsidy calculation, if your employee was making like $5,000 a month for January, February, up until like March 15th, and then they get reduced down to $1,000, you can still get the wage subsidy based on their pre-March 15th wages. So that's kind of what is compensating the people in this scenario. Like, yeah, you can still get a wage subsidy for more than $1,000 you're paying, but you can't collect both. If somebody's been collecting CERB or applied for CERB, and then yesterday or this week or whenever the employer goes back and registers for the wage subsidy, the CERB will have to be repaid by the employee. So
yeah, but it does still, from the wording CRA has, it still does look like you cannot have earned more than $1,000 employment or self-employment income. So if that employee's amount is not included in the wage subsidy, they can earn $1,000 and still qualify for CERB.
yeah, or if they're on CERB, just don't include them in the wage subsidy. Like, yeah, you don't have to. You can pick and choose, and you can kind of strategize a little bit on who to put on CERB and who to put on wage subsidy. Okay, is that for that one? Okay, next question, follow up to Eric. What if a person works 2 part-time jobs and gets laid off from one and collects CERB, but maintains employment with the other? Yeah, I think that is fine, because the employee.
There's going to be some tricky scenarios like that because the government said you can't get both, so so if
you're collecting CERB, then the other company, if the other company keeps you on payroll, then you wouldn't qualify. Like, as long as that payroll is over $1,000 a month, you wouldn't qualify for CERB, and you'd have to pay that back.
And they couldn't be collecting more than $1,000 monthly from the second one that they were not laid off from. It's kind of two separate buckets, right? The employee is the individual, and they got to look at their own scenario, and if they qualify for CERB, they can apply for it. And the employer will need to understand that if they're including them in the wage subsidy, the employer might be offside by including them in the wage subsidy, because then they'd be technically giving this person both. I'm sure there's going to be more guidance that comes out when because these are complicated questions, right? These are unusual scenarios that are tackling like every angle that the CRA has tried to. They've done their best to try and create a program that fits everybody, but it's never going to be the case. So it's likely you're going to see more guidance from CRA in the next few days when now that the wage subsidy applications live, people start running into these problems. CRA is forced to put out further articles to kind of support or let you know, because that's a tough.
I actually think the way it's set up right now isn't bad. Like it kind of covers all the, like there's always going to be some populations and like people that just do dividends and contractors, like a business where the owner pays dividends and only hires contractors, they're kind of left out. But the way the wage subsidy works and the CERB together, I think it actually makes sense for what they're trying to do. They're trying to get people to a certain level of income, which is like $3,000 a month. It's kind of their like base living allowance. And yeah, they're just trying to prevent people from getting that free money if they're making more than that. So anyways, we'll see how it works. But just remember, for the wage subsidy, you have to actually still be paid. Like you're on payroll, you're getting your paycheck each month. And so if you're doing that with one employer, laid off from the other employer, and you're collecting CERB, that like you shouldn't qualify for the CERB because you're continuing to get paid. But I think we beat that one to death. Is CEWS taxable income? Okay, next question. CEWS. So the wage subsidy, like I said, the business is paying the payroll. So the employee was paid between March 15th and April 11th. They actually got a paycheck and payroll remittance was sent in. And then the business applies for the wage subsidy, the CEWS, and that refund is 75% of what they paid. And yes, that check that they get from the government is taxable income.
A great way to say yes to answer the question.
Okay, here's a longer one. You can't see these, can you, Curtis?
I can, yeah. It just blocks my beautiful face from the picture when I bring them up.
Oh yeah, I'm just blocking your face so it all works out. Okay, so this one is, in your first comment, the CPP and EI was refundable for all employees from the CRA website. Only applied to the furloughed and on leave with pay as part of the CEWS. Employer can claim 100%. Well, this seems like CRA copy and paste. It's okay, refund for the employer paid portion of the contributions made on behalf of the eligible employees. Yeah. So what's the question? Please confirm if all employees have this benefit. If you're an employer and you pay CPP and or EI to eligible employees between March 15th and April 11th, you will get 100% refund on the employer portion of CPP and EI.
That's the guidance I've seen as well, that no matter what, the employer's portion of those will be eligible. Right now, reading through some of the CRA stuff, it does say that the furloughed, and I was laughing with someone earlier today about CRA using their choice of word. They could have had a different use of words for some of this stuff. They make it as confusing as possible. But so someone that's on leave or with full or partial or taken time off, it says only it only specifically says that during the application, like some of the details when you read CRA's website. But other sources I've seen says that the employer's portion will be refunded. So
yeah. And when this is getting pretty technical, but when calculating that that baseline wage, so what did the person get paid between January 1 and March 15th? If during that time they were on unpaid leave, you can remove that period in that calculation. Like I don't know how that helps, but one thing I remember seeing. Anyways, did we answer that question?
We
I'm not
might
sure.
have to. Maybe we can put out something on our website or add it to the COVID section, because there part D does say if the employer has any eligible employees on leave with pay. Eligible employees on leave with pay. So if you're still paying someone that's not working, then total employers EI and CPP is qualifying.
Yeah, I don't see the difference whether they're working or they're on paid leave though. It's just whatever wages they're paid.
And that's what when you run through the calculation, it seems to work out that way too. But maybe we'll have to double check that or see if we can find more guidance from CRA, because as always, it's not an easy read.
Okay, another question from Eric. Okay, do you have to apply for the 10% wage subsidy if you qualify and then subtract it from the 75% wage subsidy? You cannot apply for the 75% wage subsidy without subtracting the 10% if you qualify for the 10%. I did 2 of these applications today, and no, you did not have to claim the 10% if you qualified. That was something, if you did reduce your payroll remittances for April 15th by the 10%, then yeah, that's the last line in the CEWS application.
The wording's strange, because it says even if the employer did not reduce their payroll, because with that 10%, you didn't have to reduce it. You could choose to reduce it, or you could choose to get a refund after. So the wording in that is confusing, but yeah, Matt's 100% correct. It's only if you did calculate and plan to take advantage of the 10%, do you have to subtract that.
Okay, question from April. In order for small businesses to access the commercial rent assistance, do you know if landlords are obligated to enroll or if it is subjective to them? Yeah, there's nothing that obligates a landlord to enroll in this. It is, if they qualify, I don't know why they wouldn't. So yeah, if you're a tenant and you've asked your landlord about this, they'll probably, like, the application's not out yet. The program isn't all that detailed. We expect something like mid to late May to come out on this program. So yeah, we will see, but and who knows, like, what if the tenant, like, one guy I see in the chat has a building that is multiple tenants, a hair salon and a institution, like an office and something else. Like, what if only one of their tenants is approved? I guess they could claim it on that, but yeah, like, if you're wondering if your landlord is difficult and probably not going to apply for it, then yeah, I don't know. We will see. We will see what happens with this program.
That could be why they're taking a lot longer to spit this one out too, because they're trying to anticipate some of those issues. But if a landlord's presented with a situation where it's they have to go apply for this, or they're not going to get rent because their tenant is in a bad situation, then they're going to go do the application. So it's that's a very, very weird one, yeah, because it's up to the tenant or not the tenant, sorry, it's up to the landlord to go through the application process and collect the subsidy from the government, and that's kind of passed down to the tenant after the fact.
Yeah, and I bet so in a building with multiple tenants, half which need the rent assistance, I think you just calculate the rent on each of those tenants for April, May, June, and 50% of that amount would be the amount of the loan you'd receive. I just don't see a scenario where a landlord would qualify but choose not to. unless they just want to evict you. I don't know, I guess, like, because that's one qualification. But yeah, we will see how this program rolls out. Next question, is CEWS available even though there is no revenue? Business is closed. If you need to be paying wages during the period, so March 15th to April 11th. So I would say if you're not, I don't like, there's a lot of businesses that have ceased operations, but could, zero revenue, but they're still keeping people on payroll rather than laying them off. Then that would still qualify, because the government's doing this instead of putting all these people on EI, and like it's really an investment. Like this 75% wage subsidy, a lot of it's coming back to them in payroll taxes, and the subsidy itself is taxable. Plus, if they're paying wages, they're not on EI. So it's a pretty good investment on the government's part. Like they're saving EI, they're getting their CPP and EI back through the wage, and the subsidy is taxable. So I think if your business is shut down, but you're still keeping people on payroll, you're still good. Okay, next question. How does the rent subsidy work when it's a subleased property? I don't know.
We don't know yet. Yeah, it's gotta determine who's the landlord and who's the tenant. Maybe there's gonna be two applications on the same scenario there. It's some of those questions aren't going to be answered. Like we're not going to be able to answer them until CRA releases that, because most of these programs are okay. Look at the criteria that they've got listed. Can you fit yourself into the box to tick off all the criteria? If you can, proceed with it. If you can't, so we'll have to see if what it looks like when they do release it, and then there's likely in that scenario a sublease. You'd probably think there'd be two applications, because there'd be landlord to tenant, and then that tenant who's also then subleasing is going to have another separate one there. So that'll be an interesting one to fill out, I'm sure.
Okay, we'll just answer this one from Katie quick. Is the wage subsidy available to owner managed or employees who are also shareholders? And yes, it is. Easy one. Seasonal company. Okay, let's try this one. Seasonal company, no revenue in March 2019 or 2020, but several employees kept on at reduced pay. Revenue in April 2019, but none in 2020. For March, if your comparable period, and so for March 2020, zero income, March 2019, zero income, you could try the average of January, February 2020. If you had any revenue there, then you could show the reduction. And then if you don't qualify, then you don't qualify for that.
You have to hit those revenue figures. So if there's no revenue in March of 19, it's impossible to show a decrease. So you got to jump to the second option, which is the average of January, February of 2020. If there's anything and zero in March, then you would show a decrease. If not, then you've got to jump to April and do April versus April 19 to 20, or April 20 versus average of January, February. Just got to do that calculation and see if you hit the decrease. Otherwise, it's just they say you're not eligible.
Okay, we'll do this one from Robin. Do I need to collect the full rent and then reimburse the tenant, or do I discount the rent? I think you discount the rent and get it back from the government. But again, it's an application, which won't be out till May. So if you've already charged them, then you would refund them that amount. for April and even May. So if you wanted to, like if you're fairly certain you qualify, then I would probably just charge them 25% for May and see how it goes. Because yeah, some of them might not be able to pay the full rack. Okay, let's try this one. My business has a T-bill account. I assume this is for the CEBA, the $40,000 loan. As long as, yeah, if you already have money in that T-bill account, just track whatever operating expenses you do have when you're spending that $40,000.
Yeah, I've had a similar conversation around this numerous times now, and there isn't any real guidance on it yet. But nothing stops. So a business that has $0 of cash, 10,000, 100, $1 million of cash, there's nothing in the eligibility criteria that says any of those people would not qualify. Just because they have extra cash set aside is not any of the criteria to stop them from getting the loan. And from most of my conversations, it looks like, okay, if you're sitting on a little bit of cash, who says you already have that earmarked for something, or you shouldn't be penalized for saving or setting something aside or sitting on your own cash a little further right now, because we don't know what the next few months is going to look like. So it still looks like no matter if you have access to cash in the business, you still qualify and can get this loan. It's just then it's going to come down to how are you reporting it, which is why it's going to be important to say, in Matt's example initially is set up a separate account for it, and transfer, so you can easily show after the fact that you took this 40,000 and you used it for nothing but operating expenses. And then you're ignoring everything. It doesn't matter what other cash you have.
Yeah, the whole idea behind this $40,000 loan is that the Canadian government has great credit. Canada can borrow money at next to nothing, like 0% interest. So all they're doing is borrowing billions of dollars and then distributing it to business owners who can then spend it. They want to borrow the money and pump it back into the economy. And so that's what they're doing. They're not charging us interest because they're not really paying any interest. And it should make its way, at least 25%, the forgivable portion will end up back in the government's hand anyways. Like they're not dumb. They've thought these programs through. Okay, next question. Is there any issue paying the loan back in, say, 6 months? No, that's fine. As long as you have it fully repaid by December 31st, 2022, you won't pay any interest and you'll get 25% forgiven. Next one. Okay, sorry, I'm trying to figure out this question.
If you don't have a My Business account.
Oh, if you don't have a My Business account. Is this for the wage subsidy?
Yeah.
You can sign up for one. Like there's no mass rush on this program. You can, there is another website or another web page that the government has. You can apply 3 ways: your My Business account, your accountants represent a client, or this other web portal. But that web portal requires a web access code, same as setting up your My Business account. So it's not going to be any faster to access it that way.
Yeah, you've got to go through that setup process, whether you have or not. You got to get it, or figure out your password if you forgot it because you don't access it often enough. So they're forcing you to.
Okay, on your calculate your subsidy spreadsheet, does pre-COVID annual wage equal the 2019 gross? No, the baseline wage is January 2020 to March 15th, 2020. So it doesn't look like you can bring in 2019 wages into that calculation at all.
That's a good question, actually, that we haven't. Have you seen anything on, say, a seasonal business that doesn't have wages in the baseline period? I don't know how the government would tie that together, because initially before they issued the dates and the amounts to use for your baseline calculation, we saw guidance going a couple different ways on how to figure out what to calculate the baseline on. But now it's for employees
So
that aren't a business.
If it's true, like it's different if they're arm's length. So if they're actually like just employees that start in May, then yeah, the baseline period doesn't really affect them because you can pay them whatever the going rate is between in that period too. So April 12th to May 9th, whatever you actually pay them, you'll get reimbursed 75%. And then period 3, May 10th to June 6th, whatever you pay them, you'll get reimbursed.
It'll just ignore the baseline and go with the actual calculation would by default. Yeah.
Yeah. The owners, the owners and the owners' family members, those are the ones that would not be able to claim it. Okay, last question, and then we'll wrap up. Can I use that loan for repairs to the building, i.e. new windows? So this is the CEBA loan or the commercial rent assistance loan?
Probably the CEBA.
CEBA, oh yeah, because you do have somebody on wages. It's a good question.
That's one that's right on the fence, because if CRA asked you to report after the fact, would they say that those were, you could have deferred those? Could you argue your case that you couldn't defer those and that they were normal? Building maintenance would probably be a normal operating expense, but if it got into like a capital side where you're actually like, I think a big improvement, CRA might say, hey, you could have deferred that. Just like a vehicle purchase or a tractor purchase or something like that. CRA is going to say, no, you can't use it for that. You could have deferred that.
Yeah, you could always pay a kid to go break all your windows, and then yeah, it's non-deferrable operating expense. Or you can just find other expenses to use it towards. And
sound financial advice.
Yeah. Okay, I think that's all the questions we have, and it's 5:02. So thanks everybody for coming, and
Thanks.
We will send out a recording shortly, probably tomorrow.
Yeah, we'll be posting a video of the webinar. Thanks everyone for joining us. Please, visit our website. The blog post that I linked to has lots of great content. Follow us on social to stay on top of any further updates. Shoot us an email if you have any feedback or other questions we didn't have a chance to answer today. Best of luck to you all. Stay safe out there.
Yep, thank you.
See you guys.